Alright everyone, welcome back to the channel for another Bitcoin update. So, there's a lot to talk about in today's episode, namely because of what happened yesterday. We had a relatively decent pump to the upside. We went up about 5%, but as of the time of recording this, it looks like the dollar is already open. It is absolutely pumping to the upside right now, and the stock market is about to open bearish. Subsequently, you can see Bitcoin is getting ready to wipe out all of its gains that it made yesterday. So there's a lot to talk about. I want to start off talking about the market structure in the higher time frames, lower time frames. We'll then be moving on to, once again, looking at how Bitcoin is doing. Why did it have this pump? What does this pump mean? Total crypto market cap, dollar, stock market. Like I said, lower time frames, technical analysis. Then we'll be moving on to the oscillators and talking about a couple of risk metrics, what the oscillator's doing, what are the momentum indicators doing, and finishing off on my bear market low price target. So just like I said, there is a ton to jump into today, so let's start off the video talking about the market structure. Now, if we zoom into the lower time frames, you can see, once again, everyone got out of bed for this pump, and all we did is solidify another lower high on this trend line. This trend line is now the new sheriff in town. This is where you'd want to break above before you can say that we're bullish, but I don't think we're going to break above it. We popped above the 4-hourly EMAs, we came into resistance, we broke back down, and now we're falling to the downside of the 4-hourly EMAs. So it's not looking too good. I don't have too many oscillators over on this chart because I'm going to be focusing on them over on this chart, so we'll get into these in a second. But right off the bat, looking at the TA patterns, you can see it's not looking good. Zooming out to the higher time frames, or if we zoom out on the daily, you can see, let's keep it how it is actually, we've basically just formed a massive bearish pennant. We had a relatively decent move back down to the downside from our fib drawn from our low to our high. All we really did is come down, we bounced on our 618 Fibonacci, we bounced back up to the 382, and now it seems like we're falling right back down to the 618 fib. So in the lower time frames, or should I say in the midterm time frames, 19,246 is the level that you would want to hold if you want to even have a shred of bullish momentum going on. I don't think that is the case. I think we're going to lose this very quickly, probably today. Drawing our fib from our low to our high as well, we bounced up to almost perfectly to the 236, and in the lower time frames, you know, once again, drawing our fib from our low to our high here, we've already capitulated below the 786, and we are heading down to the 78. We've capitulated below the 618, heading down to the 786 Fibonacci. 786 in the lower time frame really doesn't matter as much to me as this higher time frame 618 right here. So once again, 19,240. If you do move down to the downside, not only are you going to be wiping out literally all of the gains that you've made in the past 2 days worth of this quote-unquote bullish bounce, which once again was just solidifying another lower high in this market structure, you would basically be colliding to the downside of your 618. You would be confirming on your oscillators that you are getting ready to move down, and once again, in my opinion, we'd be getting ready for that next leg back down to the downside. So lower time frames, higher time frames, really doesn't matter what you're looking at. If we focus on the EMA ribbons on the daily time frame, we did not even manage to get up into the EMA ribbons, which is very worrying, because every single time we do this, you can see, you come into the EMAs, let me change the color of this, you can see, you break down, come into the EMAs, lower high, lower low, lower high, lower low, lower high, and then we just had another lower high before we came down and made another lower low. If we come down to this market structure, once again, you've got your lower low down here, you've got a lower high, breakdown, you didn't solidify a lower low, but you did solidify that another lower high, and now this is panning out to be something reminiscent of an M pattern. And this reminds me of what we did here, where you've got the lower low, you kind of lollygag in a crab market for a prolonged period of time, you solidify that lower high, you break down, everyone gets bullish because you've made a high high on like the 1 minute time frame, you bounce back up, another lower high, and then just like we did here, M pattern back down to the downside, and that's when you started capitulating. Let's remove the drawings and see what we've got down here. Lower high, higher, lower low rather, and then you've got this lower high, breakdown, and then this is where people get bullish, because on the 1 minute time frame, 5 minute time frame, it looks like you've broken bullish, then you bounce back up, solidify that lower high, and then this is normally when we come to take out the floor. And what do you know, this is panning out just perfectly like the previous fractal that we did, where you've got another M pattern coming to the downside. So taking out the low is probably the next move down for Bitcoin, down here to 17,600. This is where I think we're going to be heading to in the next couple of days. Now, we do have a couple of price targets to hit before we do get down there. For example, you actually have, this is a price target I've been talking about for a while, but you have the next CME gap down here at 18,500 that you formed after the weekly opening on the 14th of December, because markets continue to move to the upside. Over on the 7th of December when you did close, obviously the CME futures for Bitcoin are not open over the weekend. You created a price gap. It's more visible in the daily time frame. You can see down here, price gap, never came back to it. So this is why I've been saying for a while that 18,500 is probably definitely where we're going to be coming down to next, in the higher time frames at least. We've got a couple of pit stops beneath there as well. For example, the 300 week moving average right now is coming in at $16,780. Once again, I think we're going to be highly magnetized towards this price, especially considering looking at what the stock market and what the dollar's doing. We're going to move into that in a second. I'm just trying to clear up some of these charts. So we talked about the next leg down, 18,500 for the CME gap. Beneath then, you have the 300 week moving average once again coming in at 16,780. That would be your next leg down. We'll talk about some of the more bearish price predictions in a second, but let's finish off with this chart. So we've talked about basically this bearish pennant breakdown. I'm not going to give you the price target of it because it's not going to happen. It's way too low, but nonetheless, even in the lower time frames, like I said, you've broken below your 618 Fibonacci. You're heading down to your 786 in the lower time frames, and then in the midterm to higher time frames, the most important fib we can draw from now, your 618 is once again residing around about 19,200. If you break beneath that, you are going to be wiping out all of the gains that you've been making for the past couple of days. And that's what I think we're gearing for right now. So let's move on to a couple of other patterns. You can also notice that we are forming a head and shoulders to the downside. Now, I actually noticed this when I was playing with the inverse chart, because obviously this just looks like a massive bull flag right now. More of a bullish pennant actually, and then obviously this is on the inverse chart, so when we do flip back to reality, you can see that we are just forming a very bearish market structure. But when I did flip this to the inverse, what I did notice is this. I always like to use inverse chart theory myself because, you know, you spot these things that you wouldn't have noticed the first time round. So what we have here is a left shoulder, we've got a head, got the neckline right here, and then you form that right shoulder, and now it looks like we're coming down. So there's a couple of different ways you can draw this. I mean, you can kind of just stretch this up here if you want and consider the neckline to be here at 19,100, or you can draw it like this, which is, you know, how it would be drawn from the left shoulder if you did something like this. But nonetheless, between the ranges of 19,100 and 18,600, which once again is also where the 300 week moving average is going to be, this would be the breakdown. If I'm telling you, if Bitcoin breaks below, you know, that 16,700, 16,800 region, it's going to be absolutely brutal. Just like when we capitulated below the 200 week moving average, you can normally always see if we do not bottom at the 200 week moving average, you always, or, you know, we don't have too much data to draw from, but you normally do have these massive quick capitulations back down to the downside, like we've seen time over time again. And I do think once we break below 16,800, 16,700, pick your poison, that we would be heading down for that next leg back down. So inverse charts are looking bullish, which obviously means when we flip back to reality, the regular charts are looking pretty bearish, and I would have to say the next direction of this trend is probably very likely to come down to this 300 week moving average. If we extrapolate the price target of this, let's clear up the drawing so we can just see it a bit better. So there is the neckline, this would be the head, extrapolate the price target, this would take us down to 16,300, which would put us below the 300-week moving average. So once again, clearing up another chart. Let's move on to the higher time frames, and then we'll move on to the oscillators, as I want to wrap up on my price predictions and the oscillators so we can see what's going on in the short term. So why did we have this bounce yesterday? Why did we move up 5%? Why was everyone getting out of bed? Well, it kind of makes sense when you look at the weekly time frame. What do we do? This was Bitcoin's previous all-time high, December 2017. We capitulated beneath it. We made a red, green, red formation, and you know, obviously that's a bearish market structure, so we completely capitulated on the weekly time frame, very, very quickly below the previous all-time high. And this week, what have we done? We've literally just pumped back up, confirmed the previous all-time high as resistance, and now this is where you're seeing this head and shoulders formation playing out, which should break us down to the downside. We are falling below Bitcoin's previous all-time high. You can see the past couple of days, we tried to flip it, tried to hold it as support, broke down, back tested it yesterday with this massive run up, and once again, we've lost it as support. So it's not looking good for Bitcoin right now. Total crypto market cap, altcoin market cap is also not looking too hot. Total crypto market cap, I've already talked about this before, but it has capitulated below the most important level, a 618 Fibonacci, and in previous market cycles you did not hold the 786. I'm not going to waste time going through all of the previous market cycles. You can go check it out yourself if you want, put it on a log scale, draw a couple of fibs from the previous markets, but we always lose the 786 Fibonacci, which is why I've been calling for a while that we are going to probably head down to this 300-week moving average, which is currently residing at 628 billion. I'm just looking at the number up here in the top left, and like I've been predicting for the past couple of weeks, or the past probably since roundabout here, so the past month or so, we've been calling for this 28% drop. We really haven't moved too far, so it's still another 26% to the downside. And as you can see, total crypto market cap is really struggling with this 200-week moving average right now. So Bitcoin's getting ready for a huge move. That is 100% certain. I think it's to the downside, but nonetheless, we will see what plays out. Over on Total 2, which is the altcoin market cap, you are heading down to that 786 Fibonacci. Once you capitulate beneath there, you do have the 200-week and the 786 Fib. Altcoins are holding up a tiny bit better than Bitcoin in the lower time frames, which is relatively strange, but I do think once Bitcoin heads down for that next major leg to the downside, altcoins are probably going to get once again battered. 300-week moving average rather is down here at 318 billion, which from where we are now is going to be about another 35% drop to the downside for altcoins. Now, looking at the stock market, look at what the dollar is doing right now. Once again, we've been talking about these bullish patterns on the dollar for a while. We formed this beautiful, beautiful cup and handle pattern, and while I do think the price target of the cup and handle is too bullish, I have been saying that this 1.618 up here at 111 is very, very likely to come into fruition, and it's looking more and more likely by the day. You know, we were talking about this on the breakout at 104, we're now up at 106. We're only less than 5% of a move away for the dollar to come up to these 1.618 targets and absolutely blow the stock market, blow Bitcoin out of the water. So the dollar looks great right now. This is not going to be good for the stock market, and this is why subsequently when we come over, what is the stock market doing? It is getting ready to open its pre-market bearish. We do this all the time, so let's see if we can smoothen it out on the Heikonashis. I think how it is now is fine. I think how it is now is fine. So what you see is you see these breakdowns, you see a bounce for a couple of weeks, lower high, breakdown, lower low, bounce for a couple of weeks. This was a double top. Breakdown, bounce for like 1 week, lower high, fall to the downside, lower low, bounce for 1 or 2 weeks, lower high, and now obviously we're getting ready for that next move back down to the downside. How do we know this is probably going to come into fruition? Because the market structure has absolutely not changed for the stock market. The dollar has not changed either. Dollar's on a massive rampage, market structure hasn't changed there. So I think a lot of people get very, very euphoric for Bitcoin over the weekend. Obviously, the stock market and the dollar's not trading over the weekend, so Bitcoin kind of is allowed to break free of its chains because we know this. We know this because Bitcoin always follows the dollar and the stock market always follows the dollar. So in tandem, Bitcoin and the stock market kind of move one and the same. So when the stock market's closed over the weekend, you know, Bitcoin degenerates can just do what they want. They can buy the dip, they can go crazy, and the stock market has nothing to say about it until it opens. But snap back to reality, when that opening of the stock market happens, you will start to see Bitcoin coupling back with the stock market, coupling back with the dollar, and we're getting ready to see that. This is why Bitcoin is already starting to capitulate, because the pre-markets are getting ready to open bearish for the stock market, and the dollar's already open. Dollar's on a absolute rampage. Look at this daily candle. I mean, it's been a while since we've seen a 1.15% move to the upside for the dollar. That is absolutely insane. Considering things like the Russian ruble have done a 2x against the dollar in the past year or so, it really just does go to show that other fiat currencies are definitely not doing too well against the dollar. This doesn't necessarily mean the dollar's doing good or the dollar's doing strong. The DXY is simply, you know, measuring the dollar against a basket of other fiat currencies which are doing worse than the dollar. And as you can see, dollar going up, stock market getting ready to open bearish, total crypto market cap for altcoins and the regular total crypto market cap all look like they want to break down. This is going to break Bitcoin down as well, and this is why we're seeing that we have already wiped out pretty much all of the gains that we made from yesterday. We bearishly retested Bitcoin's previous all-time high in 2017, and now we're getting ready for that move back down to the downside. So I want to talk about, before we move over to the oscillators, I want to talk about where I think Bitcoin is coming. So we talked about the CME gap. That is the next level down, 18,500. The next level down from there is the 300-week moving average. This is currently coming in round about 16,700 to 16,800. The next level back down to the downside would be your one wave on the Elliott wave theory. If we lengthen this up a tiny bit, you would see, you know, this was the first run up to the upside, or run to the downside. This is when you had your, you can draw this a few different ways, doesn't really matter, ABC correction into the bear market, and then you have your one wave impulse, two wave correction, three wave impulse, four wave correction, and five wave, very, very underwhelming five wave. Nonetheless, if Elliott wave theory is to remain true, we should bottom we should bottom at / above the one wave, and you know, you can technically draw this down to the candle body close. The candle body close is different on a lot of time frames. For example, over on Binance, I believe it's actually at 12,000. So I'd move it up to an area like this. Now, I really do have to emphasize, I do not think that Bitcoin is going to go this low. I don't think Bitcoin is going to 12,000. Once again, I could be wrong. It's not like I have a crystal ball, but nonetheless, I do think within this region, between the 300-week moving average and down to these levels, this is where I personally plan on picking up a large majority of Bitcoin. And also, just one last pretty bearish price prediction that we also do have. I made a separate video about this, and I also did emphasize, while this A, B equals CD pattern is perfectly valid, you've got your A, B, C, D, and subsequently, if we extrapolate the move from A to B down to C to D, your AB equals CD, this would be meaning that we have a price target down here at basically 12,000. You know, this would have been like a 52% drop into a pump down into a 75% drop. So it definitely could happen. But once again, 14 to 16,000 is really where I plan on buying most of my Bitcoin. So with that being said, we've looked at a lot of different things. We've looked at the lower time frames, talked about some higher term price targets. We've looked at the technicals, like, you know, the bearish pennants that we've got going on right now. We've got head and shoulders playing out. We also talked about the fact, why did we pump yesterday? We simply pumped into Bitcoin's previous all-time high and broke down. We've talked about the fact that the total crypto market cap, the altcoin market is bearish, the dollar is bullish, the stock market is bearish. So all of these things in tandem is making me think that we are going to get ready to slap Bitcoin back down to the downside within probably today. But within the next couple of within the next week or so, definitely, I'm thinking we're going to be moving down to like 16,700. I'd probably even bet that within the next 2 weeks we are going to be down at these regions once again. This is just my opinion. We've already wiped out 4% we've already wiped out 4% of Bitcoin's market cap, Bitcoin's price today. We moved up 5% yesterday, down 4% today. So we've literally taken out 80% of the gains that it's already made. Once again, I always do like to emphasize, people talk to me on the Discord saying, what do I think? Would I be trading this? And I always say I do not like to trade over the weekends. I like to trade when the stock market is open because it gives us a much higher indication of what is likely to be going on. Now we've got the stock market opening coming into play. We're also seeing the dollar running up, so it's very, very black and white right now that the weekend degenerative pump is done and we're getting ready for the breakdown. So let's finish off on the oscillators. Let's talk about, so have we got the, let's add the RSI. Let's see what the RSI is doing before we move into our other oscillators. Let's get rid of this. RSI. The RSI in of itself is a pretty useless indicator. You definitely need to pair it with other technicals. I always see people talking about the Bitcoin RSI. They've been talking about the fact that it's been down here since we were around about 26,000. They've been saying, the RSI is so low, the bottom is in, but as I always say, the RSI is a good indicator if you pair it with other oscillators, pair it with technical analysis, pair it with common sense and looking at how the markets are doing. Just looking at the RSI, you're not going to get the full picture. So the RSI looks very, very beat down right now, sitting at around about 25 in the oversold region. On the daily time frame, we are just littered with lower lows, and we quite recently in the past couple of months we've just been coming up to the heart line, 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 then having a move back down. Then you've solidified a double top structure over here, so you basically solidified a quadruple top over here, and then you've broken down, solidified a double top. We might even bounce back up into this in the next couple of weeks, but once again we can bounce back up into this while the price is at a lower level, and this can correlate to something like this, where we might do something like this and still be moving to the downside while the RSI is still bouncing. But RSI looks very bearish to me. On the 4-hourly time frame, it looks like we got relatively overextended, almost in the overbought territory, and we are now moving back down to the downside with a lot of room to take us back down for the next move. Now let's move over to the other oscillators. Let's talk about what's going on in the lower time frames, because I don't think we need to look at the daily, the weekly for the oscillators. We've already looked at what's going on in the dollar, the stock market, higher time frames, total crypto market cap. I don't think we need to look at the higher time frames to realize the oscillators are very, very bearish. So let's move on to the 4-hour and then we'll wrap up this video. So let's start off with the squeeze momentum indicator, also known as the squeeze bomb. So we've had another lower high. Every single time we bounce up quite recently, you see run to the upside, lower high, lower high, lower high, and every single time you get ready for that next move back down. So it seems pretty obvious as well. Looking at the squeeze bomb, the next move back down is in play. Let's see, are we still holding this higher low formation? We are, until we break down beneath 19,100, which also lines up with a couple of the 618 Fibonacci's we talked about in the start of this video. We are still technically in a micro bullish uptrend. I just don't think this is going to hold. I think we're going to break down very, very soon. Let's look at the money flow indicator. You can see in the past day, this took a massive run to the upside as degenerates over on, crypto Twitter, wherever they're doing their trading. Everyone was buying the dip, everyone was running in to buy Bitcoin over the weekend, but now the stock market is opening. They are absolutely panicking, they are selling because we are now moving back down. You can still see the MFI is so overextended right now. This has so far to move back down to the downside. It's not even funny. So if you think that, us wiping out, almost 4.5% of the gains today is bad, this is not a blood in the streets moment yet. I mean, this is a very, very bloody opening, but bear in mind the stock market is not even open yet. If the stock market opens and takes a massive leg to the downside, we could see a 10% move back down for Bitcoin in today, maybe tomorrow. Within this week, we could definitely see a very, very bloody day. We've been seeing a slow bleed out over the past couple of months. We haven't really seen a day where we kind of just go boom all the way down. So I'm definitely waiting for something like that to happen. Once again, there is a lot of room for the money flow indicator to head back down to the downside. And if we do look at the MACD did cross above the heart line, and it has made another lower high, lower high, lower high, lower high. So we're getting ready for that next breakdown. It's hard to see with the bars in the way, but you can see this green line is about to cross beneath this yellow line. This is probably going to happen in the next 12 hours, and we are going to flip bearish. If we do look at the candles as well, you can see turning into dark blue means we're getting ready for that next breakdown on the MACD. And like I said, we can go over to the higher time frames. It's basically the same. Looks like we're crossing bearish, money's flowing out the market, and we're about to reset the momentum over on the squeeze one, which could get us ready for something like this, where if we do just crab sideways, we might just do something like this and then get ready for that next major leg down. Or if we do gear up enough momentum to move below 19,100, which once again I've talked about numerous times in this video, we could do something like this where we're getting ready to reset, bearish momentum comes back in, and you get ready for that next move. This is what I think is going to happen, another bearish leg to the downside. Let's look at a couple of other of our indicators. Let's talk about the risk metric. On the higher time frames, I would definitely like to emphasize the risk metric is the lowest that it's ever been. Like we really haven't seen the risk metric this low. It kind of, yeah, we were basically at this level in 2018 where we were basically at 0, and this was more or less marking the lows. But bear in mind, you know, the risk did come down quite sharply in these levels, and it wasn't necessarily the bottom. It was calling for, you know, bottoming structures around about 6,500. We did have a heavy bounce, so as we did come back down, risk dropped, risk increased on the bounce, and we haven't seen that yet. We've only seen a tiny bounce over on the risk metric. So if we do keep on heading down, you know, the lowest risk metric that's coming in on the daily is here at 18,600. If we look at the OBV, the on-balance volume, this is also massively colliding to the downside, but in the slightly lower time frames, like the 4 hour for the risk metric, it is still very risky, and this makes sense because we've already had the move to the upside, we've already solidified the lower high, and now, as we are overextended, as we have had a lot of buyers step into the market, and we know this because we look at the money flow indicator, and this took a massive leg back up. Retail was buying over the weekend. If you want to know, you know, how do I know that retail was buying over the weekend? Then head over to my channel and click on the video that I made yesterday, if YouTube will allow me. This was the video we made, Bitcoin and Ethereum whale watching. We were talking about the fact that when you look at the on-chain metrics, retail was going crazy and buying the dip, but institutions, you know, large money whales, they were not buying the dip, they were selling onto retail over the weekend, and this is how yesterday we were able to call for this fake out. So if you haven't watched this already, this wasn't a TA video, this was an on-chain metric video, and I definitely recommend that you do check this out if you haven't already watched that. But with that being said, we've basically covered everything. Like I said, lower time frames, the risk is still quite high over on the risk metric. We're at 0.23, and we can definitely head back down to 0, which would mean, you know, we've talked about a lot of different charts, a lot of different price targets. This is why I think in the short term, 16,700 is in play. So, like I said, we had tons to talk about. A quick summary. Bitcoin's bearish after retesting its previous all-time high. Momentum indicators are all calling for the next leg down. Total crypto market cap, altcoin market cap is sitting on its last leg before the next move down. The dollar is bullish and the stock market is bearish, which should subsequently mean Bitcoin is getting ready for our next leg to the downside. I deleted the previous charts, not that it matters too much, but we talked about everything from bear flags, bearish momentum, lower highs in the market structure. We talked about the head and shoulders, which is likely to break us back down. We talked about the risk metrics, oscillators, momentum indicators, and they are all calling for the next leg back down to the downside. So that is all I've got for Bitcoin today. I probably will make another Bitcoin video later. Nonetheless, I will be updating the alts later. I have been sharing a couple of charts like these. You know, I shared this over on my Twitter earlier today. So if you do want to follow me over on Twitter to get these updates on some charts before I do post them on YouTube, be sure to head over to 618_cowboy. Shameless plug, might as well. But nonetheless, I am now going to go off to the gym. I will be back in a couple of hours, and I will be updating the altcoins when I do get back. So if there's an altcoin that you want me to cover that I haven't been covering in the past couple of days because I've been busy, then be sure to leave that down below, and I will take it into consideration when I do my updates in a few hours. That's all I've got for today, and as always, my friends, Cowboy out. Peace.